to Dr. Marc Faber, editor and publisher of the Gloom, Boom, and Doom Report, joining us here live on set for the entire hour. Staying with us is our guest host, Sir Martin Sorrell, CEO of the WPP Group. Indeed. I know, and one of the biggest of them all, Dr. Faber, but seconds ago, when you came on set, you said, hold on, you're not a bear in the near term, but in the long term. What do you mean not a bear in the near term?
Well, basically, I mean, to my credit, I said on March 6th that the market would go up, and for no other reason that if you pump money into the system and if you create large fiscal deficits, you create a lot of volatility. And as of March 6th, markets had become unbelievably oversold. The S&P was at 666, but that low was not confirmed by various technical indicators. And most of the Asian markets had actually bottomed out in October, November of last year and didn't make new lows in March. So after that, we had a very strong rally. And let me explain to you that something very unusual happened around the beginning of June. On June 3, the Australian dollar peaked out, the Canadian dollar peaked out, and gold was at 990. On June 10, the yield on the 10 years and 30-year US bonds peaked out. They had gone on the 10 years from 2.08% end of December to 4%. Yep. And on June 11, the S&P peaked out and the CRB on the same day. So at the beginning of June, we have a constellation of various trends coming to an end intermediate. Then we had a correction on the S&P from 956 to 870 last week. And since then, we have again an increase in equity prices, but bonds which had rallied between the beginning of June until a week ago, they started to weaken again. So we have these correlations, and it's important to understand. The world is now moving between waves where the deflationists seem to win. In other words, the economy will not recover very much. We'll have deflation, corporate profits will collapse. The S&P will go to 400 to 500, and the inflationists, like myself, who think that everything is a disaster, but stocks and commodities and gold can go up. The dollar will obviously be weak in that scenario.
Interesting. So who's winning out right now?
Well, until a week ago, the deflationists seem to have won out. But I'd like to talk more about this debate about inflation and deflation.
Okay.
In general, in a crisis such as we have today, where there is a deficiency of demand, where there are huge overcapacities, under normal conditions you would have deflation, because prices would collapse and stimulate demand as a result of declining prices, which I think would actually be more desirable. Now comes in the government and creates these huge deficits. In the US this year, the deficit will be in the order of $2 trillion.
Or more,
And in my opinion, next year, it will be even larger. That's not what the government is telling you, but that's my view. And then you have the money printer, Mr. Bernanke, essentially flooding this.
And Mervyn King in the UK as well.
They're all in the same boat.
The Germans are not.
We have never had this experiment in the history of mankind where all the governments in the world just throw money at the system.
But then you've also got unemployment running in the Eurozone about 8.7. America is already 9.4, trending where you talked this morning about 13%. Some people are talking about 10, 11, 12%. That's the average. In some parts of Europe, you'd be at 15 and 20%. Spain talks about 17. So it's politically unacceptable, or politically extremely difficult to take the actions to reduce the deficits that you're talking about, increase taxes, cut spending, and as a result, I think you end up with an inflation.
I think politically it would be very well accepted to fire half the governments in this world, that the remaining 50% would start to work a little bit. Because if you shift government activity to the private sector, the economy becomes more dynamic. It's a transition time that is maybe painful. But I can assure you, why has California these problems? It's not that there are too many teachers in California, but the educational department is bloated. and you would fire half of them, you would actually help the economy.
Nobody's prepared to do. Nobody's prepared to do that with You know, you look at Angela Merkel.
I am prepared to do it.
You are, yes, but you're the exception that proves the rule.
In Japan are prepared to boot the LDP out, it looks like. And if you talk about an economy or a country with deficit problems, that's case number one right there.
Yeah, sure. But you also see the result in Japan. The market made a new low in March, and the peak was in December '89. So we're essentially 20 years after a peak, we make a new low in the market, and that's, I think, what could happen in the US. That we've seen an intermediate low here in March. We can rally maybe for a year or so, or 18 months, or maybe we've seen the high. We'll have to talk about this later on. And that the ultimate crisis will happen much later, and that the ultimate crisis will clean the system.
Okay, how much later? When? What are we talking about?
Well, it could be the ultimate crisis, could be in 5 years' time, it could be in 10 years' time, but this is not the last crisis. That I guarantee.
That's triggered by inflation and a rise in long-term interest rates, or what?
Well, it could be triggered by a number of different factors, credit problems again, and then inflation, or essentially a bloated government and social problems. Or I think we'll have war. I think we'll have war.
You think we'll have war?
Yes.
Before that hyperinflation?
Well, maybe at the same time, because let's say if we had now a major confrontation coming on top of the existing deficits, can you imagine what the deficits would look like?
This is true. This is true. Okay, listen, a lot to talk about.